Welcome back to Trading Hour on CNBC-TV18. Markets managing to hold on to 25,300 levels, but mid and small cap is seeing a bit of a decline. But let's shift focus and put the spotlight on the real estate sector. And in a recent report, mid-year 2025 report review, that it's showing that India office leasing market, ANAROC has found that 2024 was a landmark year for office leasing and even surpassing pre-pandemic highs. Now, to discuss more on commercial real estate side, office leasing space, we have Anuj Puri, who's the chairman at ANAROC Property Consultants, along with Vinod Rohira, who is the MD and CEO at K Raheja Corp, joining in with us to talk to us about these recent trends. Mr. Puri, as well as Mr. Rohira, thank you so much for joining with us this morning on the show. Mr. Puri, I'm going to start with you. What are the trends that we're seeing in the first 6 months of 2025? Are they as strong as what we saw coming in 2024? And what is the growth outlook that we have for this year in office leasing, commercial real estate side?
First of all, very good morning to all of you in the studios and to your viewers. 2024, as you rightly said, was a landmark year. It was the best year in office leasing that India had seen since independence. So in the last 75 years, we've not seen this kind of gross leasing activity that has taken place in India. And mind you, office is a bad word if you were to look at the Western economies, Europe or the US, because they're still reeling under the pressure post-pandemic where the employees are still not coming back to work. And India, we are saying is that it was the best ever year in 75 years of a history of independent India. Your question is that how the first 6 months have been for 2025. We believe the 2025 calendar year will surpass the leasing that was done in 2024. There are indications coming in from the GCCs, the global capability centers. And, interestingly, these global capability centers are not only in ITITS, they are coming in industry, engineering, BFSI, pharmaceutical. Nearly 45% of the leasing last year was done by these GCCs. So, it's a fantastic opportunity at this moment in time. My only two concerns are that the vacancy levels have come down dramatically and the built-up supply is not as much as what the demand is coming in. And then perhaps Vinod can throw a little bit of light is that
absolutely
the rents will start to go up. And that is not very nice for the occupiers, given the demand is seeming, much more larger what the existing completed supply of office spaces in India.
Okay, I'm going to throw that question to Mr. Rohira as well. Mr. Rohira, good morning. Mr. Puri is highlighting not enough supply there. There is an increase in terms of demands for commercial real estate. How are you grabbing the opportunity? How fast can we expect development increasing on this front as well? And in terms of rents also, higher rents, we are all worried about that. So commercial real estate side, how do you see that moving?
Okay, first, thanks for having me on your show, Vinny. It's always great to have Anuj, because he has all the data right at his fingertips. That makes life easier for all of us. Commercial real estate, I think I would urge us to look at it at a 5-year window or a 10-year window going forward, right? We are looking at 1 quarter at a time and 2 quarters at a time. I think there have been some tectonic shifts in the way commercial real estate is being looked at. I don't think historical numbers will matter in the next 3, 4, 5 years. There are multiple reasons for this. One is cumulatively, India's GDP is going to contribute towards doubling in the next 5 to 6 years. If we believe in that story, you will see a lot of large domestic companies becoming serious players for competing in global markets, wanting to be seen and heard in global markets, and they will come and grab the best commercial real estate demand in the prime cities. Number 2 is infrastructure is the key and the governments are pushing through the agenda of making sure cities build their infrastructure, and that infrastructure backbone is going to change the demand dynamic for cities that actually deliver infrastructure. Thirdly, with point in rents, we're still average $1 rent per square foot. And I think it's high time that this rent really went up. Even if it goes to $1.50 a square foot, it's still 2 to 3% of their operating costs. We have to understand that no longer are these low cost contact centers that the GCCs are bringing in. They're actually bringing in the heartbeat of their businesses, which is real business services, cumulatively running the entire operations out of India, and the intellectual capital is sitting here to deliver their businesses. At that point in time, it's about capturing talent, retaining talent, taking the best real estate in the best micro markets possible to retain them and grow their businesses globally. Rent is incidental. So 10, 20, 30 buck rent increase not going to hurt them at all. They are in fact looking at paying higher, creating a far better experiential environment for their offices to capture right talent and then retain that talent and groom them to grow. So in my view, it's a fantastic opportunity for India 2.0 in the commercial space to really build grade A++ global standard office, whether it's for tech companies, GCCs, or for front office CBD in markets where infrastructure is playing out right, and you will see the game completely change in the next 5 years.
Interesting observations there, Vinod. Gentlemen, good morning. Thank you for joining in. Anuj, to you this time around, what are the sectors that are contributing to this? Now, you mentioned the fact that 2025 will outpace what 2024 was, and considering how good 2024 was, which sectors do you expect this to lead this kind of move, particularly because the general trend has been that, okay, IT sector is the one that has been the leader in all of this in terms of leasing office spaces. Do you see a different trend this time around?
It's a very interesting question, and I'll take it from where Vinod left. He used a beautiful word is that, these largely the American corporates are bringing their heartbeat into India. So, many years ago when we started to do office leasing, it used to be, what Vinod called the contact center, or for ease of your viewers understanding, it was the call centers. From the call center, it moved up to BPOs. From BPOs, it moved into software development. From software development, it moved into KPO. What is really today fueling the demand is the R&D. So these corporates are now coming not for cost arbitrage to India, which is what they came in when it was the call center and then BPO. Then they started to move into the talent, software development, KPO, now R&D. So they're purely coming in for the talent in the quantities that they require. Today, ITS is only 35%. The balance 65% is, engineering, new car designs are happening in here. The banking financial services, 23% leasing last year was, from the banking financial services, pharmaceutical companies, industrial manufacturing, who are coming in here for their new designs. They're employing, engineers. The BFSI is employing like chartered accountants. The pharma are employing doctors. As a result of it, what's happening also on the real estate is that the quality of real estate for the office is going up because these are highly qualified people. And also the office, which was moving to the periphery of the city, and corporates will, put in people in a bus and take them in the morning and make them work there and then bring them in the evening. That all is changing because all these knowledgeable talent is saying we need office space within the CBD, not necessarily on the periphery of the city.
To Vinod on this one, Anuj, in your first question, you mentioned about the concern that you have is that the fall in vacancies as well. Vinod, do you share that sentiment? What are the current observations that you are witnessing right now at Mindspace? Has there been a drop in vacancies? And more importantly, with the change in the special economic zone bill that has come in for commercial real estate, does that lead to a further decline? What is the current observations on ground?
So just to lead from where Anuj left out, he's absolutely bang on. They are looking only at quality real estate. And when you say quality real estate is not just the building with its glass facade and a nice lobby. They are looking at services, infrastructure, the experience that you can provide, the cumulative handling of the asset management piece, the services management piece. All of that is extremely critical. So if you have a strata title building and it's not well kept and the toilets are not right, you ask for 50% of the rent down, the guy's not going to come and take the space. So what that is doing is grade A++ office, the vacancies are single digit and they're going to further decline because there is no quality supply of grade A++. At the same time, on the macro level, you will continue to see vacancies because they are either grade B buildings or they're strata title buildings or they're buildings that have finished their age for the provision of what kind of businesses space is looking at right now. So you will continue to see a overhang of vacancy, but really if you deep dive, to the profile of customers that you're really catering to, those guys are not going to go to those buildings even for free. So that's really what's going on. So if you look at grade A plus vacancies, they're in single digits and going down. New supply is coming. Predominantly grade A supply is very, very diminished, and there are very few players who are bringing in quality supply. So that is going to contribute to how the market is going to shape. So the rents will firm up, certainly, and they will, in good quadrants where good assets are there, rents will not matter. Customers will pay you the rent.
Sure. Mr. Puri, just a quick word in terms of geographies. Where are you finding too much of this demand-supply mismatch? Obviously, we have seen Hyderabad also picking up pace in terms of GCCs. So are we going to be expecting more commercial projects there? Bangalore, Mumbai, what are we looking out for here?
Very interesting. It is the southern Indian cities. They are definitely, way ahead of the rest of India. So it is Bangalore, which is nearly 1/3 of the leasing activity across India is coming into Bangalore, followed by Hyderabad and Chennai. So, between the three of them, they take the major chunk of the leasing activity. Then the other cities like NCR, Pune, Mumbai really follow. So clearly, hands down, South India play.
All right, gentlemen, Anuj, Vinod, thank you so much for sparing time and joining us on this very insightful conversation that we have had on commercial real estate. And we look forward to having you at the time when 2025 surpasses 2024's trends, as Anuj was highlighting. Thank you so much for joining in. We take a short break here on Trading Hour, but just